Welcome back to Winning Wealth, which episode number what, 15?
Something like that. Yeah.
Something like that. We're on our way to the 20 episode mark, and this one is going to be awesome. We've got my friend, our buddy, Nick Keys, who we've done a lot of business with and plan to do a lot more with. He's a principal and shareholder at the Dickman Company. Specializes in investment sales, value-add redevelopment, lease negotiation, and property valuations, primarily in the industrial space.
100% industrial.
100% industrial. And he graduated from UWM, was in the real estate program there, and has been in business here for the last 12 years or so, brokering transactions across the state of Wisconsin. Outside of work, he likes to spend time with his dogs and his wife. I almost said his beautiful dog.
In that order.
And they live out in Lake Country. He enjoys cooking, hiking, traveling. I appreciate you being here, man. I love spending time with you, golfing with you, even though I didn't play so well the last time we golfed, or really ever in my life. But we got Nick on to talk through just he's an exceptional talent at what he does. And, on this show, we're all about building wealth, health, and happiness. And we want to, glean some insights from you, man, on what you've been able to do to be successful to date, and dive into it. Anything to add there, Brock?
No, yeah, I think a good place to start would be just really talking through. So obviously we've talked on this podcast how our main focus has been buying industrial assets. We talk a lot about finding good deals and strategies of how to find deals. So I think that'll be the premise of it. Maybe to start, maybe you could just touch on like why you chose the industrial space, right? And give people insights on as far as why you chose that space and what you've accomplished so far in that space.
Sure. Well, I appreciate you guys having me. This is pretty crazy that this has gone full circle. So I got into the business about 10 years ago. I chose industrial because I felt it was most relatable to me. I have, kind of a mechanical mindset. I like to understand how things work. One of the first times I went on, a ride along or like a site tour, it was to the old Caterpillar facility in South Milwaukee. I watched a 100-ton crane pick up a front-end loader and carry it across the building, and it just blew my mind. It's like, wow, all of that is happening inside of this building, and I'm potentially going to sell this building. So that kind of opened my eyes to the world of industrial real estate. Being in Southeastern Wisconsin, we have close to 400 million square feet of industrial real estate within the 7-county area. So the depth of our market is pretty significant considering the geography, and there's tons of great companies here to work with. So
yeah, I think and we definitely want to unpack that. Part of the reason that we are so bullish on industrial and in this space. So we want to go into the manufacturing, the warehousing, distribution space that's available here. But what would you say makes Southeastern Wisconsin a great market for industrial?
Sure. So Southeastern Wisconsin historically is in manufacturing in the sense of metal fabrication and metal bending. Those are kind of our two large industries, and it goes back to the turn of the century and being a port city and having materials come in. But we've really built a reputation for ourselves as being a hub for not just manufacturing, but mechanical engineering and technology surrounding industrial. So we have, a lot of great companies here, ranging from, small, parts and pieces to name brands that everybody would recognize, Harley Davidson and Johnson Controls, to, larger companies, John Deere, Caterpillar, companies like that. Bucyrus have all at one time had a location here in Milwaukee. So as far as the industrial product goes, we also are very fortunate in the sense that we have a nice labor base here. Most people are struggling to find labor, right? We always hear that from employers, but you do have a great kind of blue-collar workforce that surrounds Southeastern Wisconsin.
It's a Tier 2 market, affordability, so, there's a great worker-to-business ratio. So that's a great point that you bring up there. Just north of Chicago, more tax advantages here. It's a linear market, which is what we love about it. I think it used to be called the machine shop of the world.
Racine, Wisconsin.
Yeah.
Yeah. But that kind of spills over into the rest of southeastern Wisconsin. And yeah, I mean, over the last probably 8 to 10 years or so, we've seen a big exodus out of Illinois. So you have, equally great companies that are located in northern Illinois. They would like to relocate into Wisconsin. For one reason or another, whether it's, political or, tax-wise or, access to this labor pool, whatever it may be, we're seeing those companies, want to come over here and establish themselves in Wisconsin.
This is not on the what we talked about, but just sidebar conversation here. What's up with the Microsoft deal? I think they're investing even more. I just saw something on Milwaukee Business Journal.
Yeah, I can't say I know the specifics of the most recent announcement, but I can tell you that the catalyst to bring them here is our geography. So the Foxconn deal that occurred in 2016, 2017 really kind of laid the groundwork in southeastern Wisconsin to transform us from metal bending and manufacturing into more of a technology hub. A lot of these larger technology groups, they depend on resources being infrastructure, right? So they need access to power, they need access to general utilities. A big one of them is water, right? So for these larger data centers, they rely on a lot of water to keep them cool. And the affordability and availability of land in southeastern Wisconsin kind of made this perfect storm to help attract a large user like that.
Love it.
What about so asset classes wise? So in our business, right, we've started multifamily, we've been involved in a lot of asset classes, but ultimately we've really settled on the industrial space. So what would you say if you're pitching industrial, right? This is why I like industrial. Let's compare it to multifamily or even some other asset classes. What do you think the key differences are and why you prefer it?
So I always joke, you can't warehouse from home. So let's put multifamily, on a shelf for a second. But as it relates to other asset classes, what we do, you can't really replicate outside of the manufacturing facility, right? Like, office space, we're all now hybrid, right? Or we're all now on video calls. Even retail, e-commerce has really kind of changed that game. Yes, there's still a need for those assets, but not like there was pre-2020, pre-COVID. Why I think industrial is such a great place to invest is simply because you have a business that's dependent on the real estate. So in a lot of these situations, in some of the buildings that we've transacted on, these companies, they have to have the infrastructure. They have to have the air conditioning in the building. They have to have a huge power service. Maybe they have to have cranes. They have to have specialty pads, poured concrete for their machinery. So it's one of these things where if you invest in the right property, there's a great chance you have a captured tenant, right? Like these guys can't relocate to some place else.
So that's on top of that, right, for me, when I think about it, I get asked that question, right? The key difference, someone asks, well, what's the difference between multifamily and industrial, right? Is one of the big differences is leasing, right? So if you're looking at an apartment, if a unit goes vacant, right, you can put an ad up on your phone and it's much easier to find an apartment tenant. For an industrial tenant, when the building goes vacant, it's a little bit more work, right? And it's going to take more work to get that space leased, more money, more time. But on the flip side of that, right, you lock them in for a 5, 10, 15-year lease. You once you get that locked in, you're pretty much sitting back and not doing anything.
Well, and to that, the cream on the top is triple net lease, right? So multifamily,
Hallelujah.
You're constantly battling your operating expenses, right? It's like, how do we get these to come down? Can we, start billing separately, metering separately for certain utilities, or can we drop, management costs? And what can we do? A triple net lease is a beautiful thing because you pass all of that directly through to the tenant. The taxes go up, the tenant pays higher taxes, snowplow goes up this year or comes down, they see that benefit as well. So yeah, the triple net lease structure is a fantastic thing.
Yeah, you don't have to deal with the 3 T's of multifamily: the tenants, the termites, and the toilets. It's God bless the.
And in a lot of these cases, as far as maintenance responsibilities go, a lot of these companies they treat the facility as it's their own, right? And what I mean by that is, like, typically a manufacturing company, it has a maintenance person, right? That's already taking care of maybe some of the machinery or, cleaning up after, a job gets done. And a lot of times those employees will also take care of general maintenance around the building. Especially within Southeastern Wisconsin, the mindset is often, we don't want to be an inconvenience for anybody. Why don't we just take care of it ourselves? So you'll see that, maintenance individual go out and, they'll replace a light bulb or they'll fix the toilet or something like that, which, leaves you guys to play golf and hang out all the time.
Well, I think operationally too, right? If you look at some high level numbers like apartments, rule of thumb a lot of times is every 100 units you might have 2 employees, right, to manage the property, oversee everything. Where I think, let's say 100 apartments equals a $10 million property.
Mm-hmm.
Whereas with industrial, right, I've heard people that have $100 million portfolios of whether it's industrial, just triple net in general, and might only have 1 or 2 people that are overseeing that portfolio. It's like, so you look at it from that perspective, can be a much more scalable model. Of course, apartments, you can kill it too and build out economies of scale there too. But I think you look at it from that perspective, you could really build this massive empire of properties and really have a lean staff that's managing these properties efficiently.
100%.
I think the value add component's different too in multifamily. A lot of times the value add is in the lease, and particularly you can find win-win scenarios with the sale leaseback. Can you give the listeners a synopsis of what a sale leaseback is?
Sure. So a sale leaseback is a transaction, very straightforward. The name kind of describes it. So sale leaseback transaction, essentially we take a business which owns its real estate and we work out terms for them to sell that real estate, but then lease it back post-closing. Now, that may seem like kind of an odd concept, but it's a great tool to use depending on the situation the owner is in. For example, if they, let's say, need some cash for one reason or another. So I often see it as a way for creative financing. The business that's in there for one reason or another, they don't want to go to a bank. Rather, they've already tapped their lines of credit, or they're trying to acquire another business or something like that. They need some creative financing. We can structure a sale leaseback. We can help them harvest, let's say, a few $1 million from their real estate. They don't have to move. They don't have to change their daily operations. They just get all the benefit of the cash while continuing to lease the real estate. In other times, it makes a lot of sense if there's going to maybe be a transition of ownership. We can sometimes help a buyer and seller fund the acquisition through a sale leaseback strategy. So it's a kind of a Swiss Army knife of a deal. But the benefit to the investor is if you go out and acquire a sale leaseback, you have somebody who, one, has been operating in the business or in the building for a number of years. They likely have some pride of ownership, So again, with like the maintenance individual, they'll often continue taking care of maintenance responsibilities. But 2, you have zero vacancy, right? There is no downtime. You're not going to miss rent payments for like 6 months trying to get that set up. And so from day one, you're, cash flowing, and you typically have a lease that's structured 3 years, 5 years, 20 years in certain situations. And so your level of risk drops significantly.
Maybe could we explain a little bit like how the lease length really matters when it comes to identifying the property value?
Sure. So the lease impacts value in a couple of different ways that can actually help and hurt the value of the deal. So leading up to COVID, we saw rents escalating at a rate of about 2% annually, sometimes 2.5% annually. When COVID happened, we saw rents jump 10%, 15%, 25%. I mean, like some rents doubled in certain markets, going from $3 a foot to $6 a foot. And so companies, and we talked about this, it chased some shorter term opportunities, right? They wanted to do a sale leaseback where the seller was going to have a lease of, let's say, a 1-year period or a 2-year period, but after that it's kind of unknown. Well, if the market, keeps performing, then essentially you can come to them and say, look, the market rents have risen, right, significantly. We feel justified in proposing the rent has gone up 20% or whatever it may be. And you get that pop as the investor. So that's a great benefit. The alternative to that is somebody seeing value in a long-term lease, right? So if you were to buy a property and let's say it's got a 10-year lease or a 15-year lease, you put it on a 20 or 25-year amortization. By the time that lease gets to the end of the term, you're halfway through your amortization schedule, right? And by that time, you started to pay down a significant portion of your debt. You've burned, through a lot of your interest payments. And you're at a position where if the tenant decides to leave the property, well, now you got some cash flow. You could refinance, you could access a bunch of the capital in there. Or if you get lucky and they renew, you're golden because, again, if you want to refinance, your debt is significantly lower. Your rents have likely escalated and your cash flow should be improved.
Got it. Yeah.
Nick is the king of the sale leaseback in Milwaukee, and I love that. But so it's clear, it's obvious that you know your stuff and know this niche cold. How much, if you don't mind us asking, how much like total volume of real estate transactions have you done? And
Sure. So to date, I'm just about 450 million in transaction volume. So hope to cross half a B Q1 of next year. So I usually do somewhere between 30 and 40 transactions a year. As my business has evolved, I try to work on larger transactions, right? So, what it used to take me to do 45 transactions in a year, I can achieve roughly the same output by doing, let's say about 30, 32 transactions a year now.
got it. So let's take a step back. So when you first started, and I know we've talked about banging on doors and cold calling. We were chopping it up about even before the episode about that. And I always tell people on the show, pleasantly persistent is the way to be following up with people and staying in contact in a great way. You said you had the cops called on you at one point, but let's take it back to 10 years ago, just starting out, before your 450 million in transaction volume. Like, what was Nick like then, and what, like, how did you evolve into where you're at now?
So when I first got started in the business, I was making probably 300 calls a week. And our market is really served best with physical cold calling, right? So you can imagine, young Nick Keys, 23 years old. I hop in my little Mazda Tribute. I drive out to New Berlin, and I got a really cheap suit on. And I start at the first industrial building that I see. Park my car. I walk inside. I say hi.
Who's the owner?
Hi, my name is Nick. I have a property available for sale in the area. I thought you guys may have some interest. I was wondering if somebody's around I could chat with. See what they say.
Yeah.
A lot of times, the person at the front desk tells me, no, they'll take a business card. They're nice. Sometimes they're like, get the hell out of here. You're the third guy this week type of thing. But I do a lot of that. And I would do that for hours at a time. I would average somewhere around about 15 in-person cold calls an hour. So like if I would go out, for an afternoon, I could hit somewhere between like 40 and 50 doors in an afternoon. And then the next morning I spend my time going through the business cards and going through the notes. And that starts my, first day of 135, where the first day after getting a business card, I'd make a phone call. If I connect with them, great, log my notes. If I did not connect with them, reminder is set 2 days later, which is day 3. I would call them again, leave a voicemail if I don't connect with them. And then on the 5th day, I would either send an email or send a letter. And then they get logged in the CRM to follow up in 6 months. So I basically did that on repeat for like 4 years.
Yeah.
Just grinding away throughout Southeastern Wisconsin and kind of built my book of business that way.
And that's huge. I mean, so the thing is, there's a lot of people, I see it, I think I could be wrong, and maybe I'm going to date myself and seem like one of those old guys now, but like, I feel like in this day and age, especially with social media, especially with, everything being so digital, a lot of people don't want to just walk in and knock on someone's door and introduce themselves and how they might be able to help out. So how did you overcome that? Did you ever have a fear of that?
So social media wasn't an option.
Yeah.
Talk about dating yourself. In 2013, sure, all the platforms that are out there now were there, but no one was doing business on these platforms. LinkedIn was still in its infancy. So I didn't have any other options. For me to get creative at that time was to like try to do an email blast, right? Or like send a postcard, right? And it's funny, but like that's how business was at that time. I would tell you though, what's interesting to see, and I'm trying to, leverage technology. I do a lot on LinkedIn.
Yeah, we were going to talk.
Yeah, I've made a significant investment in doing that, and it's been great. I've seen a lot of positive results from it. But if you think about the time and effort that you put into learning the systems, reading up on SEO, how do I get better at this? How do I do, this type of campaign on this platform? If you took that time and compared it to, all right, I got 15 minutes. I'm going to find 2 people within 5 minutes of here, right? And I'm going to get in my car. I'm going to drive there. I'm going to walk inside. I'm probably going to talk to the decision maker.
Yeah.
How effective is that?
Oh, incredible.
Right?
Yeah.
And it's so elementary, right?
It's
And
nuts. But
it's not
very-
something, but it's not something that is hard to do.
Yeah.
And so I feel like a lot of people who are trying to find deals and you're trying to get into the business and, trying to do this and do that, it's like, look, man, like all you have to do is just walk inside and ask them if they want to buy something, right? And that's not for everybody, right? It wasn't for me when I got started, but I was 23 and I had bills and, this was my way to make some money. And so that's what I went out and did.
That's the thing. Our former sales leader that I worked with always said it's simple. It's not easy, but it's simple, right? And that's what you're
I think a common
there.
trait too is like you look at a lot of successful people, it's experience in cold calling, door knocking, right? They had some sort of exposure to that early on in their career. Something I was never in a role throughout my career that I had a lot of exposure that I wish I did, right? But
I've been kicked out of places.
it's scary, right? It's much easier just to send an email or like send a text and like instead of go knock on their door. But I think it's much more effective just like you said, 15 minutes, let's just knock it out.
Conversion rate, so like again, I give that example, like I'm going to find 2 businesses I can drive to within 5 minutes of here. Manufacturing is still done, especially in Southeastern Wisconsin, on a very local small business level, to the point where like I can literally walk in, there's somebody sitting at the you've all seen the front desk, right? There's a window, there's a front desk, there's somebody sitting there. And if I give my pitch and I say, my name's Nick, I have a new listing in the area, I thought you guys would be interested, is somebody around? There's a pretty good shot the person that makes the decisions is sitting within earshot of that. And they can hear me talking, right? And then if it does pique their interest, they immediately come out and they're like, what did you say, right? Or like, hold on, like something's for sale nearby or, whatever my pitch is. And boom, there's no emails. There's no like, skip tracing and trying to find their number and like all of this stuff. It's just like, I'm here right now. Do you want to talk about it? Yes or no?
Yeah.
And that's got a high impact.
Good old-fashioned business.
That's right. It's done face to face.
Hell yeah. I love that. And that's should be a lesson for, everybody to push themselves, getting comfortable being uncomfortable, get past that, and that's where you can find the real effectiveness.
You have to solve problems, right? Like if this shit was easy, everybody would do it.
Yeah.
Like there's a reason that there's a huge discrepancy in brokerage. Like there's a lot of the guys that, make a decent living and, they come in, they do their thing and it's all great. And then there's those rainmakers that you see around town, right?
That's right.
And you're like, wow, like, that guy got so lucky. Or like, what did they do? It's like, I don't know, how many calls did they make, right? Were they at the networking events, right? Like, are they working their contacts constantly, right? And staying in front of these people. It's just, it takes a lot of effort to do it.
I firmly believe that success in business and life is not, it's not attributed to luck. It's if you put yourself in the right position and do the right things over and over and over, you'll get lucky at that point, right?
That's the law of big numbers, right? You want to find luck in sales. You make 100 calls to set 10 appointments to book 1 deal.
Boom.
Right? And I've been doing this for almost 11 years now. I don't know if that's the exact ratio, but it's damn close.
Yeah.
Right? Like you think about the number of calls you make to actually earn a fee, it's probably up there around 100.
Yeah, and I also think, first of all, too, side note, I'm probably jumping around, but we should get one of those like some sort of sound like Brad Lee has, because he just dropped a couple bombs there, and I'd like to hit, boom, But
the effect.
Yeah, we need some sound effects here. Anyway, so
let's talk about like finding, unless you had a specific point you're going to go to there, but let's talk about like someone that wants to buy, like building a relationship with brokers, right?
Sure.
So from the other side, someone that's trying to build a relationship with you to see great deals. And I would maybe preface that with a quick story of how we met. I don't think
Love
we
this.
went
Yeah,
through
the
that.
full
Love
circle
this.
thing.
Full circle. And maybe this is a strategy you use. I imagine it's not a strategy you use often, but I'd say the title to it is how I added $1 million to my net worth by going on a podcast. So I was on a guest on a podcast. I'm forgetting exactly
Whitney
which one it was.
Sewell.
That's right.
Yep.
And I was a guest on there. A couple of weeks later, this is when I was still working my corporate job. Had a missed call. I go out and call Nick back, and we start to like, I heard you on a podcast, and I got a deal for you. And he's like, it's an industrial deal, and I was like, perfect. Actually, we're trying to buy some industrial deals. So I think like the next week,
Little did you know.
we were starting to talk about industrial.
Yeah,
and we want to
okay.
buy some industrial.
Yeah.
I don't think
So
we were that close to it though.
we weren't. Yeah, it wasn't like
You acted,
forefront.
you acted like you were though, and that got the deal done.
Act as if.
A week
right.
later, we were out at the property looking at it, and then we locked it up a few days after, closed on it, and that led to, I mean, what have we done, 4 or 5 deals together now? And
Dude,
$1 million
what,
bucks.
like $12 million, $15 million we've
Yeah.
transacted on? I mean, that's how it works though. Like if you want to find opportunities are everywhere. They're abundant, right?
Yeah.
Like if you open yourself, and it sounds so cliche, but like you open your mind up to like what's possible, and you're constantly putting out to the universe like opportunities, and like, I'm trying to work with people. I'm trying to add value, right? Like I want to help do something productive. The stuff will fall into your lap, right? Like I was literally listening to a podcast in the car coming back downtown to do a report or something, and I hear Brock, and he's just like, yeah, X, Y, and Z, and I have this financial model, and we're getting into these different asset classes, and by the way, I'm in Waukesha, Wisconsin, and we're looking to buy industrial, and I'm like, what? Like I've never heard of somebody on a podcast from Waukesha before, one, but like no one ever wants to buy industrial that I had heard of up to that point, and so for you to say that, I was like, I got to get a hold of this guy. And I called you, and like, I didn't know that you were working in wherever you were, some office, down in Kenosha. And you gave me feedback right away. You came out a week later, and we closed the deal, right? And like, now look at everything that we've done since then.
yeah,
Pretty crazy.
worked out.
Wild, and we're just getting started too. Let me say that we're in the sort of launch phase for a fund, and we're trying to push the envelope, raise a bunch of money, and go out and buy a lot of these industrial deals, and kind of have a blend of, sale leaseback deals that we know the tenant's going to leave in a year or 2 years or whatever, and then blend that with also like more sort of boring straight cash flow, not a lot of value add upside. And I have a feeling we're going to do a lot of deals with you next year for that.
Outstone.
I think we should dive into that before we go into there. Let's circle back to, let's put a scenario on there. So someone decides I want to buy whatever asset class it might be, right? Let's just use you as an example. They decide I want to buy industrial in Wisconsin. They see you on LinkedIn. They say, okay, this guy's doing deals. What should they do? Okay, they got your contact information. What sort of flow should they follow to build a relationship with you, so now you're sending them good deals?
Sure. So one, you got to reach out and make contact, right? So I'm a bit of an old school guy. I like to talk on the phone, text, whatever. You can DM me, that's fine. But giving me a call and maybe leaving me a voicemail if I don't pick up is a great way to get in front of me. I appreciate that as, somebody in sales and constantly being on the phone. But what you want to do is try to, one, establish, some type of relationship, right? So like find a way that you're relating to me, right? Like people call me all the time and it's like, hey, like this is what we want to buy. Like send us all the deals. Like I had a call like that maybe like 2 months ago, and they're really nice guys, and I think they're real buyers and I think they're real deals, but it just kind of ended like, yeah, send us what you got. And it was like, okay, like this feels a little one-sided,
Yeah, that
so
doesn't help get on your
so if there's a way that it can benefit both of us, right? It's like, obviously, if I make a deal and we close and everybody is happy, I get paid, okay, right? So like that's a benefit. But if you know that you see somebody's in my network, or you think I like to read, if there's a book that you could recommend, or if there's some way that you can bring me some kind of value, kind of as like a peace offering type of thing, that helps build a relationship with me. But the couple of big things then are feedback, right? So like if I do end up sending you a deal, give me feedback, right? Like don't tell me, hey, I'll get back to you in a week or two type of thing, because that tells me that you're not serious. So provide feedback right away. And then as part of that feedback, tell me how you're going to get the deal done, right? Like, I would like to know, where is your capital coming from? Are you selling a property to roll into this one? Do you have JV partners? Who's your contractor? Who do you want to use for title, right? Like, you can't come to somebody and ask them to, help you hit the lottery and not have, the team in place to collect the money, right? You gotta try to build some of these pieces before you, engage to find a deal.
100%. I think that's like from like my side, right? I've directly experienced that, and I think like with the coaching stuff I'm doing, it's always something I say is like, you can't just expect to send an email or give one call and be like, then they might add you to their email list, and like you might see some deals once in a while, but it's like you got to build the relationships, right? Like
100%.
take them out to lunch, take them out golfing, do something, right? And then the follow up, of course. Like if they send you a deal and go out of their way, send you an email with a deal, even if it's not the right deal for you for one reason or the other, like respond and say, yeah, thanks for sending it, but not the right location, not the right size, it doesn't hit that return metrics or whatever it is, right?
Right. And sorry, I don't mean to interrupt, but yeah, to that point with like, taking, them out to golf or something like that, like I'm not saying somebody needs to like shower me with gifts, right? Like that's not what I'm looking for. I won't turn them down. Right? You want to hook me up with a Range Rover, Jeff? That would be great. But like, it's about the persistence in doing so, right? Like, okay, you hit me up, we connect briefly. You should have a reminder set for 10 days or 2 weeks. You're going to hit me up again, for the same reason, but with a different angle, right? So it's like, now, hey, I wanted to follow up on our conversation. You mentioned, you like to read a lot. Have you read this book, right? Yep. Or, I recently listened to this podcast. Have you checked it out? That type of thing. And then in a couple of more weeks, if I still haven't started sending you anything yet, maybe it's, hey, I was hoping we could get together and go to lunch, right? Or, whatever, we're going to take the private jet out to play golf. Would you like to come? Things like that. It's like piques my attention. It's like, okay, that sounds dope. Let's go do that. So yeah, it's something where I'm trying to win their business as much as they're trying to win my business, right? Like when I do have that deal, then I want to take that deal to somebody who, one, I know is going to close, right? They're going to pay a fair price and they're going to close. But then, two, they're easy to work with. They're fun to work with. Like I have a good relationship with them and I want to do more deals with them.
And I think what you said too before about seek to add value, right? Like in some way, shape, or form, right? You don't need to shower someone with gifts, but we talked about that. We did a show on networking, that's what I said. You can't be going out and just have your hand out and like be a taker, right? You got to be able to give and try to find ways to help other people, and then just be a real human. And I always say, if to be interesting, you have to be interested, right? Like you have to be interested in your family life, right? What you like to do for your hobbies, right? And stuff like that. You just get to know people and be a real human about it, be interested in them, and then try to find ways that you can potentially help them and then they can help you.
100%. And it takes time, like don't expect to start a relationship with somebody. Maybe you get lucky, they got a deal teed up and, you're right place at the right time. But otherwise, it could take you 6 months or 8 months or however long to, start to see some flow from somebody.
You got to be in it for the long haul.
It's probably triple important too, right? When people are just getting started and they don't have a big portfolio or experience already, right? They really have to work for that trust compared to someone calls you and they got $1 billion portfolio already, then they got that clout going. They could probably supersede some of that stuff. But
yeah, 100%. And it's just everybody starts from a different spot, right? And everybody takes a different path to get to where they're going, right? So you got to sign up for the ride. And it's like, all right, I'm going to start and it's going to take me however much time. You can't like compare yourself to people, right? Like, why don't I have a Range Rover? Sorry, I keep bringing that up, but
it's the second time. I love it. I just got a Range Rover.
Jeff just got a Range Rover, and I'm
pretty pumped about it.
I'm very envious of him.
We're gonna take it for a spin after.
Yeah. But everybody's journey is different with this, right? Like, again, dude, like think about where, what you were doing when I called you, right? And think about where I was, right? Doing. Like, you never know where that next deal is going to come from, right? And as long as you kind of put yourself out there and you're willing to, put in the time and the work, you'll ultimately be successful.
I know that you have some sort of life hacks that you do, like Sunday meal prepping we talked about. Your Sundays are, what are some of the things that you do on a routine or consistent basis to be able to be as productive as you are?
Sure. So Meal prepping is a big thing. We just crossed over 500 Sundays of meal prepping.
Wow.
And so shout out to Alicia Keys,
good.
Shout out Alicia.
the real Alicia Keys.
The
So every Sunday, we get our groceries in the morning and we got it dialed into about an hour and 10 minutes, and we do all of our cooking and then the meal prep for the week. And it's all, you go on Instagram, you see those like really nicely organized like fridges and everything's like weighed out. That's how ours looks.
Yeah.
I'm not saying that to brag, but like we got in the rhythm, and that's what we do to find success with healthy eating. And if you kind of take that, I mean, think about how much time you have at night, right? Like you get home, maybe you work out after work, you get home, it's like 6:30. It's like, oh man, if I'm going to eat something healthy right now, I probably got to go Whole Foods. I got to buy the ingredients. I got to come home. I got to preheat the oven, whatever. Where it's like, I come home, I pull it out of the fridge, I either pop it in the oven or throw it in the microwave, it's done. Right? And I eat immediately, right? And then it kind of takes off the pressure of like, am I making a healthy choice or not? But so that's one thing that I do. The other thing, I wear a suit and tie every day.
Love that too.
Some people really don't like it, which is very odd to me. Guys give me a hard time quite often. I'm not sure what that's about. But I wake up every morning and I put a suit and tie on, and it's time to go to work.
Yeah.
Right. And I don't work from home. I go into the office, and this isn't for everybody, but every morning I take a shower, I put a suit and tie on, and I
something else.
I go into the office, right? And like when I get there, it's work mode, right? And like I'm dressed in my suit of armor to start making cold calls, right? And getting beat up on the phones all day. And two, when you have a suit and tie on and you walk into somewhere, it gives you instant credibility. Instantly, right? Like I can't tell you how many times I have been walking through a manufacturing facility and somebody will like ask me if I want a cup of coffee. And it's like, you don't even know who I am, right? Like am I supposed to be here? Am I trespassing? But their instinct is that, a suit and tie must be some type of business professional,
It means business.
should show them some type of respect, right? So it carries water with people, and I don't have plans of taking it off anytime soon.
Dude, it's inspired me. I went and shout out State and Liberty. That's where I get my suits and all my shit from. But I noticed that Nick was always rocking the suit and tie, and I'm like, you know what? You just feel different,
100%.
right? So I'm rocking this, and it's like, dude, I mean business right now. I'm not just sitting there in a t-shirt and a backwards hat. Now sometimes I do, but I think that's a great practice. So Monday through Friday, every day you're wearing a suit.
Fridays are casual. I don't do a tie.
Okay. Suit, no tie.
But I still wear a suit. Yeah.
I go back and forth between this. When I used to work when I was at Uline, like we had to wear a tie every day, right? So I was so used to that. And then now it's like, unless I'm going out and visiting, going to a meeting, or going outside of my setup from work from home, you're just wearing sweatpants and like a sweater, right? Mm-hmm. So I go back and forth of what you see some people that are on the opposite side where it's like they just wear a t-shirt and that's their uniform, right?
Well, Adam does it.
Yeah,
he kills it. That's.
But I get what you're saying. It's like it's the look, and it commands authority right away.
Yeah, and it's not for everybody. And like for sure, dude, if you're working from home, right? Like please don't. That's weird, right? Don't sit around in a suit and tie like Step Brothers, right? Like on the interview with the tux, like. But part of it too is, again, I put a suit on. I go into the office. Now I'm at work. Okay. If I get a phone call and somebody wants to go look at a building, or I've been trying to get a meeting with somebody and he's like, look, I got 30 minutes before lunch. Why don't you come and see me? I am 100% ready to go. Yeah. There is no like, oh shit, I got to go home and change, or like I forgot like my tie or something like that. It's like, I'm ready for anything that's going to happen. And I just, dive right into it.
And that's similar along with the meal prepping thing. You're a prepared person. You're prepared.
Mm-hmm.
Yeah.
Proper preparation rarely tastes defeat. I think I had a football coach that would say that back in the day.
It's pretty good.
You like that one? Oh, there we go. Amen.
Need a little assist on that one.
The only other thing I can think of with any type of prep, so every Sunday, so do the meal prep in the morning on Sundays, and then I go through my calendar for the week. So I spend about an hour or so on Sunday afternoons, and I kind of do a look back of like, here were all of my meetings. This was all of like my to-dos from last week, what got done, what didn't get done, what's not going to carry forward to the coming week. And then I start mapping out time blocking, setting appointments and everything for the coming week. So like I can show you the screenshots from the last, I don't know, 2.5 years where every Sunday my calendar is done, right? And it has work starts at this time. Here's my first meeting. Here's my first call block. This is when I'm going to post on LinkedIn. This is when I'm going to go get lunch. Like I try to block it out as much as I can. Rarely goes according to plan.
Yeah.
You have a plan to get punched in the mouth type of thing. So like the
Tyson.
day never ends as I started it or intended to start it. But if you don't have that plan, it just kind of spirals.
It's chaos.
Right? It just takes off on you and you don't know where it's going.
Okay, what about opportunity? Let's take a crystal ball and talk about opportunity. Jeff was mentioning previously we're working on this fund, and we'll have some more news to share on that here, and maybe it's an episode on the podcast we do in a couple months. But where do you see? Let's talk specifically industrial, because with the fund we're setting up, it's going to be industrial. Where do you see over the next year, 2 years, opportunity heading? Right? Do you see some opportunity coming? I'd even talk about sale leaseback specifically. Is there some opportunity in that arena? What's your
Interest
crystal
rates,
ball? Yeah, high picture.
nobody's
What's your
got a
crystal
crystal
ball?
ball,
Yeah.
Sure. So first and foremost, buy industrial real estate from me, preferably. But I think there's going to be a lot of opportunities with continued demand. Okay. So I actually this morning I was at a conference for about an hour, and it was supply chain based. And the whole thing was about onshoring, reshoring, nearshoring, friendshoring. Like they had all these different terms for it. But, basically you are seeing a huge push to bring supply chains closer to home or back to, basically headquarters, right? Back to where the business is located. And so I think you have companies that had a lot of headaches during COVID, stuff sitting on shipping containers, just-in-time manufacturing, really messed up for 18 months. And they want to do this stuff closer to home. So as you see these companies come back, well, they got to put this product somewhere, right? They need a space to manufacture, right? Like, yeah, it's great in theory, but what are you going to do with it? You got to put it somewhere, which leads us to industrial real estate. So as the e-commerce trend continues to grow, people want more stuff and they want it quicker. You need to have those facilities closer to home, right? So like if you want something delivered to your condo within an hour, that means the fulfillment facility needs to be within a 3-mile radius of your building, right? So boom, there's demand. If you want to control the length of manufacturing time and not be dependent on a third party or another country to get your materials, well, we need to bring the supply chain right to our backyard. So I think you'll see a lot of those industries come closer to home. As far as the markets go, I do think there's going to be some turmoil in the next 12 to 18 months. You had a lot of people take out adjustable rate financing going through COVID, right? Or they financed a deal at 3% interest and, they got 2 years of IO and they were not planning for when interest rates rise. Or maybe they have, a line of credit with a floating rate for a piece of their manufacturing business and it's not performing. And the bill's going to come due. So I think there's an opportunity to use, sale leaseback transactions to come in, offer them an alternative, right? It's like, okay, look, you've already maxed out your line of credits, right? The bank is looking at your balance sheet. You can't afford to take on any more traditional debt. Mm-hmm. Where else do you have equity, right? How else do we free up capital? Now, what I want to hear is that they got a good story, right? So like, we're not just going to throw good money after bad, right? If they're in a hole, we'll try to give them a lifeline, but they got to tell us what they're going to do when they get out. And so what's the strategy for the business? Why are they having issues? What are they going to do to solve the problem? If they get the money, how are they going to spend it, right? Like those are the questions we want answered. And if we feel good about the story and we're confident that, a cash injection from selling the real estate will fix or help fix their problems, then I think it's a win-win for both sides.
Well, a lot of these businesses, right, that own their warehouses might have built them or bought them a long time ago, right? Mm-hmm. 10, 20 years ago. And the value of industrial real estate in general, but industrial really skyrocketed, right? So they're sitting on a lot of times $1 million, $2 million, $3 million of equity in these deals, and they're not in the business of owning real estate, right? They're in the business of running their business. So if they can just unlock that $3 million, inject it into their business, and now their business skyrockets, they take it off their balance sheet. We come in with that lifeline of we get a great deal.
100%. Yeah, 100%. And, with that, a lot of these companies, if you ask them, how do they make money? They say in their business. It's like, okay, well, wouldn't you rather invest your money in your business, right? It's kind of like, I mean, don't get me wrong. I believe in holding real estate long-term for wealth creation, but it's kind of a different story here. It's like, okay, how do you maximize value? In most cases, if you gave these guys $2 million, they could double, triple, quadruple, their sales or their revenue over a couple of years, whereas that money is just sitting, kind of collecting dust in their real estate.
So what about, okay, back to personally, how do you approach like goals? Do you set goals for the year, targets, where, and then also where do you see yourself, or where do you want to strive to be in 5 or 10 years?
Sure. So I do, kind of the cliche end of the year, last 2 weeks of December, right? Do a big goal recap of what I did for the year and set some big, hairy, audacious goals, BHAGs for the following year. But I try to break it down quarterly. I try to break it down monthly. I try to set, goals for myself on, what I hope to earn this year. What do I hope to achieve, through my career that's not tied to, just pure income, right? So, like, I like doing podcasts, right? Like, this is fun. I want to do some of these. I like public speaking. I want to try to do X number of events a year. I sit on a couple of boards. I want to continue that work. Do I want to give back some other philanthropic way? Like, what are these other kind of career adjacent things that I can do? And then, also personal goals, right? Like, I try to take, one international vacation a year. I try to do, between 3 and 4, like 4 to 5 day vacations a year, right? I try to get one massage every quarter. Like I have these different things that I try to do, and they're not out, like going to get a massage, for example, right? Like I actually see that as more of a maintenance thing, right? Like, you're in sales and you're constantly getting beat up on the phone, but hopefully you have a healthy outlet to, kind of relieve some of that stress and tension. But I mean, you need to have like self-recovery,
100%.
like you need to be taking care of yourself and, massage, eating healthy, spending your money on things that improve your quality of life, I think are a great thing. So, I try to be, mindful of, here's the whole year, this is what I'm trying to achieve. And then, quarterly and monthly, I put time on my calendar. Sometimes it's 15 minutes. But what I try to do is I try to leave like my office or my house. So we have a conference room, like a community room in our building. And I go there, even if it's for like 15 minutes. But like I take my goals with me. It's like, okay, no electronics, no laptop, no anything. It's printed off with a pen and like, where am I at and what's happening, right? And like I try to make some notes and kind of see, where am I failing or what have I have been able to achieve over the last month and, kind of stay on top of it that way.
That's a monthly thing that you do?
Yeah, once a month.
That's huge.
And then bigger ones once a quarter.
Yeah. I love it. And then personally, right? I think you and Alicia, you want to have a family. We talked about what kind of a dad is that in Lake Country?
Oh, it's an alpha dad.
Alpha dad.
Yeah. So
It's an alpha dad.
I want to be an alpha dad with Nick
Alpha
someday in
dad.
Lake Country.
So Lake Country, Heartland, Delafield, Oconomowoc, Wisconsin, Alpha Dad, you got the newest Suburban. Okay, so it'd be a 2024 Suburban.
Got it.
You got, like the latest Lulu joggers.
Yeah.
Okay.
Wearing Lulu right now.
You got the coolest baby carrier, and you're basically just doing like overhead lunges down the driveway.
Yeah.
With your Yeti cooler.
Yeah.
And and you're just trying to be the most alpha dad in Lincoln.
Yeah.
And it's a way of life, So I'm not there yet, but hopefully one day, I'll have the newest Yeti cooler and I'll be
Big goal.
the baddest dad.
I think you're well on your way, buddy.
Um,
Well, we definitely want to have you back, but I think this was a great. I mean, there was a lot of. If we had the sound effects, I would have been hitting bombs left and right.
can I ask you guys a question?
Hell yeah!
Okay. So you guys, I know you're working on it now. Brock, you kind of made the jump where you went from W-2 and kind of doing this as a hobby to going full time.
Mm-hmm.
When you made that jump, it must have been terrifying. Or maybe it wasn't. I guess
was.
that's my question is like, I feel so many people, they want to be an investor, right? And like, they see you and you're driving the Porsche and you're making the videos and the planes and like this is all cool, but like they don't understand that. I shouldn't say they don't understand what you did to like hang your 10 feet off the edge of the board and like just jump, right?
Yeah.
And it's like, whoa, like, dude, it takes some balls to do something like that. Like, I'm not doing that, like that's scary, So like, I'm just curious, like what was going through your mind? Was there a certain inflection point that you hit, or like, how did you come to, bring yourself to do that?
Yeah, so I think, I was working my full-time thing, started doing real estate. We started Smart Asset Capital, started buying these properties. So I was doing both for about 3 years. And of course, the goal was always like build this big enough up, right? So I can leave this and go full-time into this journey. So the goal I had in my head, right, was enough cash flow coming in from the properties that where I was making the same amount as I was making at my W-2 job. Right. And cash flow from real estate can be, vary a little bit quarter by quarter. And of course, you're getting a little bit of raises over here. So I got to a point where it was close enough, right? Like it was about the same. So finally I was just like, fuck it. Like, if I don't do it now, like, when am I going to do it? There's never gonna be a perfect time to leave. So I was like, set the meeting with my boss a week later. And I was like, this is the day I'm gonna do it. And I left, right? The first year was scary. I think the first year I got to a point where I had $30,000 on a credit card.
Ooh, damn.
It was, but I always had like, I was never worried about it because I just always knew like it's gonna be fine, right? And then we did some more deals. I sold a property. I think that was a deal you actually sold for us, and like then things have been good, right? But it's the first year was scary. I think I was in a much more comfortable position now, of course, but it's there's always gonna be ups and downs, right? It's not as stable every 2 weeks. Here's your paycheck, and you get your bonus at the end of the year. It's you can have some really good months, and you can have some really scary months, and you just try to aim for as many good months as possible.
That's awesome. Well, I got a lot of respect for you for doing it, man. That's something that people talk about doing all the time, and few commit to doing it. So, cheers to you.
Thank you.
I would agree. And so the thing is, and everybody's got their own individual circumstances, and I think the way that I look at it too is that you want to be running towards something, and you want to be working on things that are interesting to you and exciting to you. And of course, you've got to. Everybody's different. You got to make kind of the right choice and timing wise. But yeah, for people that are able to jump off the cliff like Brock, it is certainly very admirable.
And I think you hear a lot of people like burn the boats early on. I go back and forth on that. Like, I think you want to prove the business is going to work first, right? Like, don't just have this idea, I want to buy properties and go quit your job the next day. Like, you want to build it up to where it's at least generating revenue, right? Then you make your own risk decision of, okay, I'm comfortable leaving now, or let me get to this point and leave, right? There's always that balance. But at the end of the day, it's like, if you're committed to it and you're confident, like, you got to make the fucking decision and do it.
So if you were to do it all over again, well, I'm guessing you would. But would you have waited as long as you did? Did you time it?
I think I timed it. I think I timed it about right. I think looking back on it, like the trajectory after I left was like a great time in the market to be buying, and there's probably a few deals we bought there that who knows, that could have been for me being full time, right? So I think the timing actually worked out. I've never actually thought about it, but I think it's looking back on it, it was the right time.
That's awesome. That's awesome. Well, thanks, guys.
Dude, thank you, man. We're going to have to do this again.
Yeah.
Hopefully, after the next big deal.
That's right.
Let's go get that done.
Let's do it. All right. That's the pod.
That's a wrap.
Cool. Awesome, guys.
Thanks for listening to the episode we just recorded with Nick Keys, the industrial broker expert here in Wisconsin. We talked through some awesome stuff. Like we mentioned throughout the podcast, we've started working with Nick several years ago, done a lot of deals together, going to do many more. So we dropped a lot of great things in here. I think one of the big takeaways for me is we discussed how important it is to get in contact with brokers, build relationships with brokers, follow up when they send you a deal. Some of those things are so key, and as someone that's trying to come into this space and find great deals, these are things you really need to be focused on. So appreciate you listening. Like, comment, subscribe, share with anyone that you think would find value.